This is big banks' most frightening warning to investors.
But understanding why, it will allow you to position yourself in a way that will improve your outcome. And then I'll give you Wall Street's, literally Goldman Sachs's 10 reasons to be worried, which is very important to understand. Always important to understand the bear case so you can know how to position and look for opportunities. And then I want to give you the one reason that I'm actually really, really bullish, plus some bonus data that I wasn't going to share with you, but I think we've got a pretty smart gang here who tunes in most days live. So I think you can handle the data, and that will give you insight that very, very, very few people have. So that's the intention here. Does that sound good? If that sounds good, just write good in the chat. And I know that you're alive and kicking and keen to improve everything that you're doing here, even though we're a little late here this morning. Mike, my friend, you need the hedging document. If you do, just drop me an email and I'll ping that over to you very gladly. I send it out to everybody who was on the last masterclass that we did live, which, of course, good point, my friend. If you guys want to also learn what Mike, for example, has learned, and so many thousands of you, I think 15,000 of you or something have watched the masterclass so far and actually learn what stocks do we buy and when, and I'll give you my tool for that in a moment as well. But there's a link down below, felixfranz.org/get free, and it literally teaches you everything that I've learned over the last 13 years in the market.
Get to the data. That's what I hear.
I'm very excited to have you on board, my friend, and ask as many questions as you got coming up there. That's what it's pretty important at the beginning. Don't get quiet on us. Make sure you ask questions. Take advantage of the insanely great mentors that we all have and share. They don't want to be in anymore. So that's kind of, Goldman's warning from Goldman's desk. So there's a lot of pain. Basically, people are selling not because they want to, but because they're hitting their stops. They're fearful. They're getting knocked out of positions that they don't want to be in anymore. So that's kind of, Goldman's warning there. And then this here is from El Presidente. This is Trump. And he put out this very, very now famous sentence. He said, there could be a little disruption. Let me show you what a little disruption looks like. This is like the heat map right now, live. I mean, look at that sea of red. Tesla down 7%, NVIDIA.
Hang on, let's get as most up to date as possible on this map here. I do love looking at this map. Now, the reason the stock market is falling as hard as it is you can see there's actually a decent amount of green. I would say there's probably a third of this that's green. The issue is that the S&P 500 is a market cap weighted index. So these bigger ones represent larger market caps. And when they're down 3, 6, 6, 3, 15, 5, 5, 5, 4, like those are going to have a larger impact on the overall ETF for the S&P 500, the SPY, versus if everything were equally weighted, it might not even have that big a difference. Hey, do me a favor. What's the equal weighted S&P right now? I'm gonna have to Google it real quick. Equal weight S&P 500 ETF. I want to see that right now. RSP. I want to see what that looks like. Now, of course, it's going to be down. RSP. Yeah. Different story, isn't it? RSP is down 1% right now. Actually, I want to add this to my main list here so we can see it side by side. 1.63 on equal weight versus over nearly 3% right now on the market cap weighting. Do you see the difference there? Do you see why having those big stocks, the larger market caps, pushing down the market can actually lead to outsized moves in the SPY? Now, we're so used to saying, oh, the Mag 7, after we watch this ad, oh, the Mag 7, they're going to prop up the market, right? Let's look at year to date. Year to date, 21% down on NVIDIA, 10% down on Microsoft, Tesla down 45%. Right? If you're telling me that you're a long-term investor in Tesla and you just watched 45% of your investment evaporate since the beginning of this year, I'm telling you, you're doing it wrong. Tesla has gone up from the price it was last that this was in October of 2024. It went up, and I'm not joking, 120% up. 120% up. Now 100% of that is gone. 100% of this move up is 100% gone. And yet you want to tell me you don't want to sell because of taxes. I would much rather have to pay taxes on my 100% gain than to be looking at 50% of it down, being down 50% right now. Because I'm pretty sure that by having your investment and then doubling it, and then you might have to pay taxes on it, is still going to be a lot better position than you would be today. Randy has a great rule right here. This is a huge rule. Never let a winning trade turn into a loser. I know for sure that's one of Minervini's rules. Let me see if I have that written down real quick. Never let a good sized gain turn into a loss. If you let Tesla round trip you, I think it might be time you play a new game. I think it might be time to turn on Mario because the stock market is not for you.
3, Apple down 4, Google down 4, Meta down 3. This is a proper morning sell-off. I mean, the sort of thing we haven't seen in a very long time, probably not for about a year or so. So this is probably why this happened. He said, you can't really watch the stock market. And therefore, we're getting into a territory where we are much like about 14 months ago, we're worried about one thing. By we, I mean the market. We're worried about the big R, the big recession. Is Trump's cutting of government jobs and government expenditure going to drive us into a recession because the Fed is too slow to cut interest rates? That's the big question here, right? And we'll come back to that in just a moment here. Fox Gaming, my friend, appreciate you pinning, putting out that link there for everybody who wants to learn in moments like these. These are the moments where you really want to learn, right? This is what's happening to most stocks right now. This is the Russell 3000, so it's like most kind of mid-cap stocks. And look how much down it is. It's down 30% from highs, pretty much across the board, right? Okay, healthcare is a bit worse, energy is a bit worse, and financials are slightly better, but still they're down like 20%. And after this morning, everything is down more than 20%. This is a pretty significant sell-off, and I think we need to acknowledge that if your positions are down 30%, you're doing all right, right? You're just doing average. Now, can we?
If your positions are down 30%, you're just doing average. Oh my gosh.
Improve on that always. Risk management is where we make our money. So again, I put a ton of risk management lessons into that feedspencer.com/get-free, and I'm actually thinking about adding some extra lessons in there, like a bonus for how do you really protect yourself in these times? How do you insure your portfolio so you don't like bleed from a crash, but you actually make money from a crash? If you want to get a summary of that, write crash in the chat here, and I will know how many of you want it, and then I will make it, and we can put that out maybe tomorrow. Brent says risk management saved me. That's exactly what saves us in moments like these.
I don't know who said that, but yeah, risk management will save you. That's exactly what I talk about, being a risk first trader, right? And also, like, we don't have to overcomplicate things. We really don't have to overcomplicate things. While the market is down 9, almost 10%, let me remove this. While the market is down this much, right? We don't have to overcomplicate this. We can focus on the outlier trend template. You guys know it. The 10 over the 20, price over the 50. And it doesn't matter how great of a company it is, right? I saw so many people screaming how great AMD is, which is now a $96 stock, how great of a company AMD is and how it's going to overtake everything NVIDIA's ever done. But being that that is your opinion, there's a big issue here. And that issue is that the market doesn't agree with you. The market doesn't agree with you. And this is what you want to have happen. You want to be, first off, you want to be market aware. Don't just stick your head in the sand and say, "Oh, I'm gonna blindly buy it. If it goes up, I'm buying it today." You want to be this guy right here who's like, "Wait a minute. Somebody talking about a buy? Okay. Let me take a look at it. Let me see where my risk is at." And then you want everybody coming in with you. You don't want to be the one guy who's saying buy right here in the middle of a selling frenzy. Because they're telling you, "Oh, you've got to buy the dip. Buy the dip right now. Buy the dip right now. Buy the dip in Tesla right now." You have to buy the dip in Tesla. It's down 50%. If you buy the dip in Tesla, it's going to go back up 100%, and then you'll have doubled your money. If you buy the dip in SoFi, it's going to go back up. Here's the problem here. Until Nancy Pelosi releases her upgrade to the charting platforms that we have here, until we get the Nancy Pelosi special, we can't see the right-hand side of the chart. So we don't know if it actually is going to go back up. And it could go way down before the dip finally stops. Am I repeating myself? Yeah. Why do I have to repeat myself? Because YouTube continues to push out these charlatans who claim that they know where the bottom is, Buy it today. $75 in this stock will make you a millionaire. Buy the dip. It's only going to go back up from here. If you don't buy the dip today, you will regret this for the rest of your life. It's just constant malarkey, constant mumbo jumbo. We don't know how far this dip is going to go. And to rush into it is a very, very, very dangerous place to be. So trading risk first is the way that you keep your money, which I'm pretty sure at the end of the day, Warren Buffett has 2 rules. Number 1, don't lose money. Number 2, see rule number 1. If you're buying on the way down, you're breaking both those rules.
Make it worse. And you probably want to hear that. And like after this, I promise you, there's some positive news and there's some real hard indicators that give us some path out of this and that we need to understand here. And I'm seeing a lot of crashes here. Okay, a lot of you guys are worried about the crash, though funnily enough, slightly more of you are still worried about missing out on the big breakout. Okay, there's a lot of crash stuff here going on. Brilliant. And honestly, that's precisely what I always say to my new students is you'd have the most success if you focus on risk management, so crash management, rather than like I want to make $1 billion by Friday. So everybody who's coming to us with that mindset of like I want to protect my money, yes, I want to grow it and I want to accelerate the growth, but I actually want to protect that. The bottom line here is that those people actually do best. So all of you guys who've written
so I like to watch Felix's videos because I know a lot of people say he's a scammer, but I'll tell you one thing. He at least talks about risk management. He at least talks about making sure to be a risk first trader and knowing where you're going to get out if it doesn't work out.
Crash here in that's a very good mindset you got there because you're focused on the right thing. You're focused on the downside protection. And that's something that we need to do all the time, even in good markets when most people forget about it. Now, what's happening here the next couple of weeks? Well, the second half or most of March, we zoom in here a little bit, is typically historically not brilliant, right? And it picks up again from April onwards here. And therefore, we have to
We just watched a video last week from the Heresy Financial channel, which I've liked a lot of his stuff. But that video last week where he talked about how the dip is already over before it even began, the bear market's over before it began, he referenced this specifically and he said, March is always really bad. April always goes up. So therefore, you need to start thinking about where you're going to buy once April rolls around. And it's like, okay, sure, let's blindly buy it because historically it has gone up. Will it go up? It absolutely may. And if you pull this video a month from now, I'm going to say the same thing. Will it go up? It absolutely may because trends change. But in the meantime, don't rush into it. Don't rush into it.
Be realistic. The market moves in zigs and zags, and March is usually not a particularly great month for all sorts of reasons. Historically, this is the last 20 years. But after March comes April and May, which are typically much, much better months. So we need to ride out this wave a little bit, but we need to make sure that we still have some money left at the end of that wave so we can go back out and we can invest and we can buy the dip and we can buy the good quality stocks. That's really, really where we.
And buying the dip is real. Buying the dip is real. And I want to go back, and I showed this last week, and I just really, let me do this. I want to do a 2 charts. I'm going to do SPY today, and I'm going to do SPY during COVID. And I saw someone in the chat or left a comment. I was like, this isn't the same as COVID. Shut up. Shut up. I'm trying to make a point here. And the point is you can buy the dip. What Chris is saying, buy the dip? Yeah, you can. But you need to wait until it tells you what's happening. Look, here's today on the right-hand side. Here is 2020 during COVID. There were people screaming, buy the dip right here. Buy the dip. And you know what happened to those people who were screaming buy the dip? They met our old friend, Mr. Monkey Hammer. And it dipped and dipped. And it dipped and dipped. And it was like they went to Dairy Queen and they're like, excuse me, sir, I would like to have a vanilla cone, but can you make an extra dip? Can you put a double, triple, ultra dip on that? That's what happened to these people right here. But the smart people understood that you don't have to buy it on its way down. You can look at something, I don't know, maybe the outlier trend template, just for the outlier trend template. And you could wait for the 10 moving average to cross over the 20 period moving average and price to cross over the 50 period moving average. And lo and behold, look, it happened on April 14th of 2020. Huh. So while over here, they think they're geniuses, right? These are the people on YouTube right now who are screaming, buy the dip, buy the dip, buy the dip. And a couple of green candles comes by and they were like, see, told you. And then it absolutely gets monkey hammered to death. Down 35% in the span of 22 days is what happened on the left-hand side. And yet, if you had waited and bought the dip when the dip stopped, and you know how to measure that, when the dip stopped and started going back up, you won't believe this. You would be up 10% while these people are just getting back to break even. I want you to really let that sink in here. Rather than buying it as it's going down, you're never going to catch the bottom, so don't even consider that. You're never going to catch the top, so don't even consider that. But instead of letting it fall and take you with it, let it jump out the back of a C-130, taking you with it, all the way down. You could have waited, bought it on its way back up, and then be up 10% while these idiots, well, these other YouTubers are just now at break even. And they're like, whew, thank goodness I'm back to break even. I don't have to sell my house. Now look at today. Eerily familiar. Am I calling for a crash? No. I'm saying price is going down. It's a fact. Undeniable. It is a bearish trend. But is now the time to buy? Is now the time to be buying this dip? Hey, I look for shorts every opportunity I can, my friend. But I'm not going to FOMO into any short. I'm going to follow my plan. But you can do that. If that's part of your plan, that should be a great time to do it. A great time to be short right now, if it follows your plan. So on its way down, I'm not buying this. No way. But when it turns around and starts coming back up, then you'll hear Chris say, oh, you know what? Now is a great opportunity for dip buying. And I'm sure you're going to follow along because you have subscribed already. I'm sure of that. And until we get the Nancy Pelosi package, we're not going to be able to see when that happens, which you don't have to know when exactly. You just have to be market aware. Be market aware of when the dip stops. And then, I know this sounds crazy, but that's when I'm going to say, now's the time to buy the dip. And I'm going to say it. Now's the time to buy the dip. When the dip stops. But Jeremy says falling knives are good. Yeah, they are good if they come back. Was there any guarantee that this 35% sell-off here was going to be reversed in the span of how many days? How many days did it take to come back? 15 days? No, that's unheard of. A 35% down move going back up in 15 days is crazy talk. Did it happen? For sure. But you didn't have to do it all the way down. Did not have to do it on the way down. For sure not.
We make money, right? What if you want $1 billion really badly? That's also a good thing, my friend. I like ambition. I like motivation. It's just a question of priority. Like in the priority always, and that's why I put this out, the 3 rules to better trading, but also better investing, because it's actually the same thing. Spot the breakouts, learn the rules, which is why I put that link down below to the masterclass, felixfriends.org/get free. Okay, so let's run through Goldman's list of pain, and then we'll move on to the positive side of life as well, because there is a silver lining here. Jeannie Sangner, super kind of you. Appreciate you sharing that. That this is helping for you, and if this is helpful for anybody, like, again, put it in the chat. Just put a 1 in the chat if this is helpful for you to understand the market better, and it makes you feel more confident and comfortable with your.
Put an OPP in the chat if this is helpful, like Frank just did. Put an OPP if this is helpful. You know me, OPP. Put an OPP in the chat if you find this is helpful.
Decisions, then that's amazing, because that's the whole point here. Now, Goldman Sachs, one of the leading investment banks in the world, if not the leading. Certainly, if you ask somebody who works at Goldman, they say there is only us and nobody else. Yeah, that's how cocky those guys are. And they're saying, okay, there's 10 reasons why the market's tanking. The first one is growth concerns. So the manufacturing data here, thanks for all the ones, guys. Big Motor is getting no value out of this, my friend. What's the reason there for that? Weak confidence reading payroll. Second is just tariff fatigue, because it's with Trump, it's like, oh, there'll be tariffs. No, no tariffs. Oh, the tariffs are back. Tariffs are gone. Tariffs are back. It's like confusing. It's probably strategy to like control the media or something. I don't really know what the point there is. Or maybe the strategy is simply just to tank the market because that's going to make it easier for the Fed to cut interest rates, which I think is what they really want there. Big motor has gone up to 666. Okay, now that's a little weird looking, but anyway. And then yeah, there's a lot of stuff that's weird. The German and European yields are breaking out. They're spending $900 billion allegedly that they don't have on defense and infrastructure, and that's a surprising thing from the Z Germans. The technicals are pretty weak, right? We're looking at the 200-day moving average line, and let me show you that right now inside Trade Vision here. And I'm working on a better version of Trade Vision rather, which where we now have like news summaries, which I think are super cool. And it's basically saying, look, the S&P marked its worst week in 6 months last week. It dropped 3.4%, driven by tariff uncertainty and tech sector sell-off. And then Trump policy, inflation data on the 11th is going to influence it a lot. The Fed's comments suggest caution on rate policy. People are bearish, and then it even gives you like key drivers, like the price range we're looking at, the key dates coming up and stuff. And we're going to put all that out into Trade Vision, hopefully in the next, I want to say days. I don't want to promise a time frame, but it's coming pretty soon. And we're going to give that to you guys for free as part of Trade Vision. Everybody's already signed up because I think it's tremendously helpful to have the right data points. And we'll do that for every single stock. So you see exactly what's going on with your stock without having to trawl through all the news. And we'll literally go through social media and everything, our little algorithm there. And that's going to be super useful. So if you want to get yourself a trial for that, a free trial for that.
I'm a little frustrated because I want to hear what's going on. Now, I'll grant here. Let me ask you a question. I don't know how many times I've seen him tout his web class. I don't know. It just, yes. Do I plug outlier? For sure. Do I put outlier up in that corner and that corner? Yeah, for sure. But I try not to make it obnoxious, right? I really wanted to learn more, but I keep hearing about this Trade Vision. I keep hearing about masterclass. Just tell me what's going on.
Confidence. We lost 326 million in outflows just on the last trading day here, 6% down year to date so far. So yeah, it's a little concerning, and volume is pretty significant on the sell-off here, right? But again, zoom out. Last time we were below that for just 1 day was in August. That was a pretty good time to buy at 420. And the last time before that was in 2023 when the market really tanked quite a lot. But again, in hindsight, that was a good time to buy stocks, right? So just bear that in mind as we run through the rest of the Grim Reapers list from Wall Street. So saying, technicals are weak. We just looked at the other 200-day moving average line. The CTAs, the algo funds, they've sold a lot, but that isn't the full story. And I want to give you the full story in just a couple of minutes because I have actually a chart on that kind of blows this negativity out of the water. So this point here, the systematic supply thing, I would kind of take that away. But yes, last week, the computer funds sold a lot, right? And that's really important. There's not a lot of liquidity. There isn't. There's just not a lot of like people trading and buying stuff. So that means if no one's buying stuff, it's easier to tank the market. Just like, you sell something, there are fewer buyers, so therefore you tank the market. The consumer, not some concerning data. We've come out of some of the earnings there. And then here, as I said to you before, I showed you that chart on seasonality. We typically don't do very well in these early March weeks, right? So the first 2 weeks of March are typically pretty terrible. That might turn around mid-March towards end March, at least historically.
All right, let's wrap it there. By the way, let me introduce myself. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I know you want to see the slides. There we go. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. Now, normally I'd say let's rank this video. I don't want to rank this video. I didn't feel like I learned anything. I'll be very honest with you. Of the 15 minutes we watched, I think there might have been 45 seconds that were useful in that. I don't want that for you. I don't want you to rank this video. What I do want you to do is put your stocks in the chat because we'll be looking at those in just a minute. But before we get there, let's look at today's member highlight. Okay, so this just pulled up. I haven't even read this yet, Mikey Mike, but let's read it together. This morning, Chris said this stock, BBVA, had not closed below the 10 EMA, and it's on an uptrend. Okay, I'm trying to learn here. So the candle I have circled in red went below the 10 EMA. Why wouldn't that have been a signal to bail out? Oh, you know what? Mikey Mike, it didn't close under there. That's a good question. So let's pop over to BBVA real quick. Let's go back to the one chart view and then close this. So this candle still closed above the 10 EMA right there, Mikey Mike. It opened up below, but it still closed above. So very good question. But there was one that I wanted to. It was actually really good. Hang on. Somebody had asked about. There we go. Paul Denizen of the Deep. You get my gold star of the day, my friend. Paul, I hope you're here on the live stream. If you're not, I hope you can catch us on the replay. Paul Denizen of the Deep gets my gold star of the day, and here's why. Johnny O had posted some profits. Congratulations, Johnny O, on that. But his question was, let it ride or nah? And then Paul Denizen of the Deep said, follow your plan? That's the right answer. That's always the right answer. It is always forever until the end of time. What's your plan? Where are you going to get out? And then are you going to hold yourself accountable to do that? So Paul Denizen of the Deep, absolutely masterful response. Everybody drop in the chat. Let's pay our respects to Paul in the chat. So everybody type in Paul, P-A-U-L. I'll even do it too. Let's pay respects to Paul in the chat. Congratulations, Paul. I think you, sir, are a rock star. For that is exactly what I would have said. So therefore, you're a rock star. Everybody is dropping Paul in the chat. Precisely, exactly. Everybody pay respects to Paul. Paul, I can't wait till you watch this. I can't wait till you watch this, Paul. In fact, I'm even going to reply to him. I mentioned this post in today's live stream, and we all paid our respects to Paul. That's right. His name was not Robert Paulson. His name was Paul Denizen of the Deep. Tell me if you get that reference. All right, let's move on from that. What I want to do next is make sure you share your stories in the Discord. And of course, tell everybody you know about Outlier. That's the best way you can, that's the number one way that you can pay me back, is just tell somebody you know about Outlier. And of course, you can hit the like button too. Now, real quick, let's look at what I would trade in the Outlier trading room. An outlier shows you if investors are acting irrationally, fearful, or greedy, and by how much, allowing you to get into the stock before the outlier move happens. And you can get into the annual pass for just 82 cents a day over at outlier.com. Or if you're on a monthly trial and you're ready to upgrade, just shoot us an email and we'll take care of the rest. Now, my style of trading using Outlier starts, or it's called the golden ticket trading strategy, and that's where only price pays. And it starts with the market. Let the market tell you which direction it's going. So we do have the 10 under the 20, price under the 50 on the SPY. Let's go confirm that real quick in case something has changed. No, nothing's changed. Definitely a bearish trend. Next, this is going to blow your mind. Market breadth. Market breadth might just be bullish. Like, what? Yeah. Market breadth is actually about to cross. I would consider that crossed over today. Crazy talk. Crazy talk. But why? Why would market breadth be crossed over today? I don't have a crystal ball into this, but my opinion is this could be a short-term bottom. I think what we're about to see, and I could be completely wrong. Let me tell you, I'm not calling a top or calling a bottom, but I think we might be near a bottom here, because I think what's happening is we're getting more buy signals. We have 49 new buy signals today versus 21 new sell signals. I think we're getting new buy signals because these are short coverings. Now, let me explain what that means. For those of you who are new to the market, imagine that you, hey, there's our thumbnail of the day. Imagine that you go short on this candle. Just for example, imagine you go short right here. You sell the stock. And then you get a buy signal down here. That doesn't mean buy to go long, like it's going to go back up. That means buy to cover your shorts. That means buy to close the trade. So for example, if you are long puts, you would buy the puts here and sell out the puts here on this buy signal. If you are short shares, you would short here, you would borrow here, and then buy to close here. I think that's what's going on. And that's why market breadth is starting to tick a little higher. Now, market breadth is ultra cyclical. You can see it's like 2 weeks up, 2 weeks down, maybe a week up, a week down. So I'm not going to be surprised at all to see more buy signals come through. And then in a couple weeks, maybe 1 week, we see more sell signals come through again. Not at all. But that is my guess right here. I'm not going to put any money on the line. I'm not going to put any risk on the table, but I'm really thinking this could be a short-term bottom right here, which coincidentally is really close to this order block right here. Really close to this order block. Disrich says it right. Exactly. Closing the short positions. That's where I think we're at today. But that's going to lock me out of the master key. The SPY signal is still on a sell. The market trend is still down. Market breadth is still kind of bearish. It could absolutely be flipping to bullish right now. So because of that, that's locking me out. Locking me out. And that's okay. And going back to what we talked about earlier, right? This is my trading plan, and I have no FOMO. None at all. Because I know where I'm going to get in. I know why I'm going to get in. I know where I'm going to get out. I know why I'm going to get out. But in the meantime, sitting on my hands, putting no risk on the table whatsoever. So for me, no trade setup for me today. But like I say, put your stocks in the chat and let's take a look at what we have. Let's see. Let me scroll up just a little bit. I'm going to start over with everybody's paying respects to Paul, which is awesome. I can't wait for him to see this. Let's look at STZ. Dot wants to look at STZ. And let me close several tabs so we have less to work with here. Okay, STZ, STZ. Hang on, I didn't do that right. STZ. Okay, inside of Outlier on STZ, we do have that buy. Okay, this is exactly what I was talking about. This is precisely exactly what I'm talking about. Dot, thank you for this perfect example. The sell signal within the downtrend that came on December 17th. Huge move down. Buy to cover. Do we understand what I mean by that? A sell signal came here. This is a buy to close within this downtrend right here. So where does it look right now, though? You got your 10, 20, 50 crossing back up today. So this could be a buy the dip opportunity. Could be. If we look at it right here, right? Rather than buying it on the way down, you could let the dip happen and then buy it when it's starting to come back up. So STZ has a little bit of legs to it to me. 10, 20, 50s cross back up. Just remember, when the market's pulling it down, 40% of the stock's move is due to the market itself. 30% is due to the sector. 30% is the stock on its own. So the market, 40%, the sector, 30%, the stock itself, 30%. The market we know is very bearish. The stock itself is getting less fearful, but the staple sector is continuing to get a little bit more bullish, a little bit more greedy, which that's where people go in a defensive trade right there. Sasha wants to look at crowd, CRWD. All right, so this one, we got a sell signal right near the top, right near the top. And remember, I tell you this all the time, on the behavioral heat map right here, the further it gets, the more likely it is to snap back. That's what we saw here. It went up, it went up, it went up. It got to a rating of 38 out of 50. And then what happened? Sell signal. So this would be a sell to close, remember? Buy to open, sell to close. So this would have been a sell to close signal, but it also would have been a great short entry, by the way. Peak and then snapped back. Now this is fearful. The tech sector we know is fearful. The market is definitely fearful. Yeah, that's a hard one for me for crowd. Are you long crowd? Because this would be a tough ass for me. Oh my gosh. When I looked at this last, it was down 17%. Now it's down 30% since that sell signal. So that's why I say always go back to defaulting on your trading plan. And you might be short. And if you were, that's awesome. Uh do we get the discount if you want to upgrade from trial? Yes. If you shoot us that email, Mahesh, our CEO, will make sure that he enables that discount on your account. So no issue. Um yeah, I know I skipped that slide. I skipped that slide. I was trying to save a little time because I want to make sure I get through all these. So we went to STZ, we went to crowd. Let's go to EXPE. EXPE. That's funny, Wes, that you mentioned that I skipped that slide. You guys are awesome. All right, EXPE. Currently sitting on a sell signal. Let's zoom into the 3 months. Oh, we do have upgrades coming this week. I don't know which day. Probably by Wednesday, we should have some upgrades here in the platform, which I'm really excited to share when those come through. February 28th, we got the sell signal. Got really high up in that greed so quickly. Up at 36 out of 50 and has sold off since then. Starting, it's down at G28 right now. The discretionary sector getting more fearful. Yeah, Expedia here. I'm hoping that is a short setup for you. Does look like it bounced right on this order block. Tell me order blocks don't work. Tell me order blocks don't work. And another reason that I think we might be hitting temporary low is I think a lot of orders are going to be coming down this order block right here. Lars wants to look at XPEV or XPEV. Oh, do we not cover XPEV? We cover 2,500 we cover 2,500 stocks, and we're adding more all the time. But if it doesn't have enough data that we're looking for, that's why it's not included yet. XPEV. Oh, look at that. XPEV, huge move up, right? 10, 20, 50, all moving north. Order block right here at 23.91, and you can see it's had 2 candles that have already bounced off of it. How far back do I have to go to see this order block? This order block was made in 2022. The further back they are, the more, or the stronger they are. The more stronger they are, I should say. Look, the first time it ever came up to here, got pretty close, then bounced off, came back down. And right now, XPEV, XPEV, I mean, it's in a beautiful trend, but I think you've got some decent overhead resistance. Marcus wants to look at XOM. ExxonMobil, XOM. Aussie Ian, sorry I'm late. I didn't get the memo, dude. Yeah, the United States of America has changed its time. We do that twice a year. I know we're weird. I don't think anybody else does it. So we got a sell signal on March 3rd. Been really sideways for a long time. A bit of fear in this stock, a bit of fear in this sector here. And if we look over here, XOM. Yeah, look at that sideways trend. Look at this order block bounce. 1, 2, 3, 4, 5 times on ExxonMobil. Yeah, this is just not one that is really captivating to me. And the reason being is that it's sideways, right? I'm looking at something with momentum. But you know what? You might have that crossover right here to be bullish. So it might just work out perfect for you. But of course, always follow that trading plan. Chris wants to look at coin. Let's look at coin, COIN. Double check that I spelled it right, COIN. Okay, yeah, we don't cover coin just yet. Ouch. Coinbase. Let's see. In November, it was at the same price it is today. Oh my gosh, here's another great example. Here's another great example of a stock that went up 94%, and 100% of that 94% is gone. You don't have to do now, Chris. I'm not saying specifically you. I'm just giving some lesson here. You don't have to do this. You don't have to round trip stocks. When you round trip stocks like this, you're doing it wrong. Take your signals, get out when your signal that you planned on comes, then get out of the way and let the stock go. Just let it go. Just let it go. Let it go. You know the deal. Let's look at PGR from Alana. PGR. All right. Sell signal on PGR right near the top of this one. Look at this, like 3 candles off the very top here. Heat map got as high as G40, so or G39 out of 50. And of course, like I say, look for the snapbacks when they get super high. Both directions, right? You can see how fearful it got and how greedy it's gotten since that point. But again, look for the snapback, and then the financial sector has been getting more fearful. Let's go look over here at PGR real quick. PGR on the charts. Ooh, overhead order block right here. PGR might be a great time to get out. In fact, it might close under its 10 EMA, which is a exit signal for me. At the last time that the 10-20-50 crossed back up was right here. Tell me that like trend template doesn't work. It doesn't work every time. I know that. But it keeps you in a trade when it's there. Your 10-20-50 came over on this candle here. Not once did it close under the 10 EMA. If it closes today, that would be a great exit signal with a 13% gain. Alana, very good job on that one. Let's look at Dot says you are an oasis and a desert Sahara. You are welcome, my friend. Brandon, let's go, Brandon. I know you either you love that or you hate that. But I mean, it probably couldn't be worse if you were named Karen. Let's look at Amazon. All right, so looking at this on here, Amazon, we got a buy signal up here. Could have made a few bucks on it before it starts to turn around. Now, for me, I would be looking for the heat map to stall and turn around. So for me, the exit signal would have come right here on February 10th. So might be a break even on that trade right there, but it would have got you out before the big move started down. So this is important, right? The signals have lots of different data points that come into them, but you need to be market aware. And in fact, my very favorite part of Outlier, as you could probably tell, is the fear and greed heat map. And of course, it went way down into the fear. Right now, it's sitting at R22. The discretionary sector is also getting very fearful. Amazon looks way more like a shorting opportunity than a long opportunity for me. Let's do this exercise again. Amazon went up 24% and has now round tripped that 24% move up, back down, back down. Yeah, it's brutal. And that's the thing, is you don't have to hold stocks that are being brutal to you, right? I say this all the time. All stocks are bad. Amazon is a bad stock. SoFi is a bad stock. Nvidia is a bad stock. All stocks are bad. But every once in a while they act right. Every once in a while they act right. Hey, do me a favor. If you are an influencer of any size in any niche, we want to work with you. In fact, those of you who have emailed me, I will be personally emailing you back. We want to connect with you, and I'm going to be giving you a call here in the next few days because I want to make sure that we can start working together. And we want you to tell everybody about Outliers, what we're trying to do here. Of course, be sure to tell me what you're trading in the chat, and be sure to come back on tomorrow's live stream where Outliers like us will help you save time, make money, and start winning with less risk together as a team. YouTube is going to pop up a couple recommended videos. Be sure I recommend you click one of those. There we go. That's what I need to say. And I also recommend you show up to tomorrow's live stream and check out this sweet song.
10 over 20, over 50.